Hi guys, hope you're well. This is HTrade and I am a partner trader of Wesley Trades HQ. Alright, so I want to do a recap of yesterday's trade because this type of trade is going to be, I think this is going to be near your hearts. Every single trader has gone through exactly the same thing. Everything is perfect, but you still hit your stop loss. So at the end of the day, that is how trading goes, right? But you will notice the way that the stop loss was hit. That makes the difference in this type of setup, right? So this is something that I need to work on, but I'll explain to you as I go along with the trade. So the previous day, I was up 51,336. Very cool. All right. So let me just quickly go back to the charts. I'm actually currently running in a very beautiful trade, to be completely honest with you. If it's going to hit take profit, I have no idea, but my stop loss is at break even. So this is now a completely risk-free trade. I think after I've broken down the New York setup of yesterday, I'll be happy to break this one down for you as well. Like I said, if it's going to hit take profit, I have no idea. It's basically consolidating at this point in time. But if it's going to go back down, hit my stop loss, it is what it is. It's going to be out at zero. I actually had a trade earlier as well. I risked 250. So we tapped CE. We printed the bullish candle and boom. But before I went into that move, I made sure that I was with the 15-minute time frame direction, which is perfect. It tapped this 15-minute fair value gap, price went up, price created a 1-minute inverted fair value gap formation. I was looking for CEs, CE, 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 and then this was the first one that was tapped. And then it printed a bullish candle and I was in that trade, and literally within a matter of a minute, I got stopped out. Now that was 250. So yeah, it is what it is. Well, what else can I say, right? So let's just quickly go back to yesterday's trade. So while this trade is running, let's just quickly do a breakdown of yesterday's trade. So basically, let me just quickly, since I only traded New York, I'm only going to break down New York, right? So I'm going to do this. Start new. Here we go. All right. Perfect. Cool. So what happened yesterday? So this is the London time frame. Yesterday, let's take a look at the daily time frame, higher time frame here on the right hand side. All right. So this was the previous, this was actually the daily high that we were looking at that point in time. So it was here. So beautiful, right? So we basically tapped a daily fair value gap here yesterday. And no, sorry. No, ignore me. That was before that price was tapped. All right, in any case. So yesterday opened with, no, we did tap the daily, there was a daily fair value gap here. In any case, so yesterday, Asian time frame did its thing. We went up. We were bullish on the 15-minute time frame. We actually could have caught a buy during this location here, but I was too busy to trade London yesterday. I could have caught a very nice trade there, but it's fine. So at the end of the day, what happened yesterday? So we took out the previous daily high, right? So with the ending of the Asian time frame, we took out the previous daily high. Price went further up. It basically retraced back into after this big sell-off, it started retracing up. That's what happened, right? So we started retracing, and wouldn't you know, if you take a fib tool from the top to the bottom here, it retraced almost 50%, almost 50%. Any case, so let's go to the 15-minute time frame. I'll always look at the 15-minute time frame because the 4-hour and 15-minute time frame must be aligned for a A+ setup, which at this point during London session it was. It printed a 15-minute inverted fair value gap, and we started closing. This is normal 15-minute fair value gap. Sorry, normal 15-minute fair value gap. This was a inverted fair value gap here. So we started closing below a bullish fair value gap. That is a bearish confluence. So basically, we created a bearish inverted fair value gap. So it's a bullish fair value gap turned into a bearish confluence. We created a new bearish fair value gap. Price went down, price went up, tapped this fair value gap, and literally New York Open was completely bullish to begin with, 100% bullish. There was literally no time to wait. You can literally look for a sell right away. So that is exactly what I did. So let's start off. Okay, let's take a look. Boom, there we go. First candle. First candle, 9:30. First candle. CE tap, and where was my, and I created this, I was in the trade, I put my stop loss here. My rules say you can put your stop loss either at the candle body, or the candle that created the CE in the first place, the fair value gap in the first place. So you can put your stop loss at the high of this candle, or you can put your stop loss at the turning point, which is that right there. All right, so I chose to put my stop loss here, and let's see what happened. So basically the aim of this trade was London session low, or the tap of this. There was a 4-hour fair value gap here, and this was a daily fair value gap. Any case, boom, 1 minute. I was taken out completely. Stop loss hit, done for the day in 1 single minute. But let's just check what happened afterwards. Take profit hit. So strategy wise, 4-hour direction was bearish, 15-minute direction was bearish. We could have immediately started looking for a sell because both of those directions was already bearish. Look at one single CE tap, which we got here. We printed the bearish candle after that CE tap. Beautiful. Beautiful. And then got taken out. Boom. Stop loss hit. And that's it. That's done. You're done. You're done. And best of all, let me show you what happened the rest of the New York session. Let's just make this a little bit bigger because let me give you the bigger, I need to give you the bigger picture. So here's the Asian time frame. Here's the daily inverted fair value gap, a daily fair value gap. Price just tanked, right? Before it could tap this area there. Oh, no, never mind. It did. It did tap this area. We just tanked. So, number one, my strategy was cool, great. According to my strategy, my direction was good, right? No problems. My stop loss was the issue here now. But the thing is, I plan my stop loss every single day based on the same rule. either this candle body high or this candle high that created the CE. So let's take another example. So here, in this case, where would my stop loss have been? So if this CE was tapped and we, I don't know, let's just do this. Where would my stop loss have been? Here or here? Either one of those is correct. Some people even place the stop loss here. So would I say that I went against my strategy? No, I didn't. I did everything correct. I did everything correct according to my own personal strategy. So at the end of the day, the stop loss was literally just too short. If it was here, on the other hand, I would not have been stopped out and I would have hit a beautiful 1 to 2 risk to reward trade. That's it. Boom, you're done. Done for the day. And take a look at the rest of the movement. So eventually, as price went down, it started consolidating when it hit this daily fair value gap. There was one daily fair value gap here, right? And then price started consolidating. And then there was a 4-hour fair value gap here. Inverted fair value gap. Why is it now an inverted fair value gap? Because 10 a.m. New York Open. Then this was a legitimate, we legitimately closed below this 4-hour confluence. Legitimately, let me do this. You see there? Oh yeah, here we go. So basically, we closed below that. There was a daily fair value gap, but there was a 4-hour fair value gap here as well. Here, somewhere. I can't really see now. But yeah, oh, there we go. I think it was here. I think it was this one. No, yeah, there we go. I'm looking at the wrong place here. So there it is. So 4-hour, 10 a.m. beginning. So this is the 4-hour candle that began 6 a.m. So it ended, what, 10 a.m., right? So this one begins at 10 a.m. We literally tapped that 4-hour fair value gap by the tick. The tick. Right? So what now? Price tanked. That's it. It's still bearish confluence. There you go. So, yes, you could have looked for a buy here, but the problem is that 4 hours is bearish and 15-minute time frame is bearish. So that's why I just wanted to look for a sell, right? As price went on, I started looking for sell confluences from this area, and this is a BPR. This is a bullish fair value gap, bearish fair value gap in the same area, straight through. And it created another BPR right there, and boom, you can just enter your trade off of a BPR is a literal entry model on its own. So when this BPR was created, was either here or here. You could have entered your trade here, put your stop loss at the nearest high, and look for 1 to 2 risk reward, or 1 to 1.5, whatever the case may be. You could have entered here as well. So, and then boom, take profit hit. TP hit. That's it. So yeah, that was New York. That was New York yesterday, guys. New York. Done. All right, so I'm gonna stop here because I want to see how far my trade is and if the trade is done and what is going on here. I'm still in this trade. My goodness. So why did I opt to go into this trade? Let me go to let me quickly go back. So you see, 4-hour direction is unfortunately bearish. So I'm trading against the 4-hour trend. This is why it's also so difficult for price to move at this point in time. It's moving against the 4-hour trend. Because why? There's a very big sell-off candle here. It created a very big 4-hour fair value gap, but you see my chart is already full all of these higher time frame confluences. So I can see with my eyes, this is a very big red candle. This is the fair value gap, right? So we're hitting this fair value gap. Now, the reason why I wanted to buy is very simple, right? Retracement. Because of retracement. So on the higher time frame, what are we doing right now? So yesterday we tapped into this daily fair value gap. Not yesterday, during this week, Monday, we tapped into it and we started going up. What happened on Wednesday? Big sell-off. Boom. We closed below that, and this is now a daily inverted fair value gap. A bearish confluence, right? Bearish confluence. Now, undo. What am I doing? Wait, what am I doing here? Oh, I accidentally moved my stop loss. That's what I did. Sorry. Let me just quickly put it back to where it was. All right. Okay, cool. The reason why this trade is so beautiful and why I took this trade is because of the higher time frame confluence. So what am I talking about? You see there's a daily inverted fair value gap there as well. This is a bearish confluence, but this higher time frame confluence is a magnet for price to hit. Use this as liquidity and do whatever it wants to do next, right? So this morning there was one trade that I missed that I was so pissed about because it's a beautiful, absolutely clean trade. Clean. 15-minute fair value gap tapped. 1 minute created an inverted fair value gap. We tapped this as price went up in CE. Enter your trade there. Stop loss at the new turning point. This is something that I'm busy backtesting now because I don't want to put my stop losses too low anymore. Like here, this would have been me in the past. Would have put my stop loss here. Yes, you could have hit it better, take profit, but you could have easily been stopped out, and then boom, price go into your direction. Oops, sorry, you're out. Done. Klar. Any case, so rather put your stop loss at an appropriate place. Please. I'm begging you guys. All right, so then after this, so basically we as price went on during the London Open, we tapped another, like I explained this trade earlier. I got stopped out, so this was a minus 250 loss. We're actually on $500 now, so I can close this trade if I really want to. But like I mentioned, there's a higher time frame confluence at the top there. This may sound like greed, but it is quite possibly greed, to be honest with you. So let's make the decision now, right? Let's make the decision now. All right. 500. I'm going to close it. The reason why I'm choosing to close it right now is because 100% I was greedy. I'm greedy. I'm not. It's a good greed. It's not a bad greed. What I mean by that is price is still going into my direction. Price can still go and tap this daily inverted fair value gap, but I've already taken my profit. I'm done now, right? So the thing is, because I already lost here $250 and I made here now $500, right? So you guys literally witnessed me doing a live trade here. So let me just break down this trade now as well while I'm here, right? So why did I choose to buy here? I'm just going to do this. I'm just going to say take profit hit. Just going to say TP hit. I'm going to quickly put this in the Discord. I'm just going to quickly put this in the Discord, right? So let's just do this. I'm just going to say, thank you, London. Session NQ, it was a blast. All right. And then I'm going to DB hit. More info posted in the NQ. HTrade NQ 2025 section. Let's see what New York brings later. Boom. Done. All right. Beautiful, right? Beautiful, 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 beautiful. So, yeah. Cool, eh? Interesting. And I have full confidence that price is still going to go up. Why do I have still full confidence? Because very easily, yes, like I said, mentioned, 4-hour direction is currently bearish. We have a 4-hour inverted fair value gap. We have a daily inverted fair value gap here. Let me just quickly remove all these confluences quickly, because we're done with this trade now. Completely done. So and let me just delete this as well. The reason why is because the bigger institutions out there, well, there's news. There's news at in the following hour and 10 minutes. There's news, but we traded against the 4-hour time frame. That's why I had to make the quick decision now to close this trade. Once I saw that $500, that's why I had to change my mind just like that, right? So we can take only so much per trade. Remember, we are scalping. It does not help to hold a scalp and use it as a swing position. No, because the direction can still change or go against you. I wanted to break down this trade earlier, right? So where did I buy? Where did I buy, right? So I bought here. Why did I buy here? Very easily. Price tapped a 15-minute fair value gap. Number one. Number two, there is an inverted fair value gap that has been respected many times. Many times. Right? Tapped even through it, went up. Tapped again, went up. Right? So why did I enter this trade specifically? Because my motivation for this trade was that big magnet at the top there, which is the daily inverted fair value gap. And so that's number one. Number two, there is also a 4-hour inverted fair value gap. Number two. Number three, if you draw your fib tool from the nearest high to the nearest low on the 4-hour time frame, the 50% level is only here. We're not even close to that level, and bigger companies out there. So if there's a news event, price might just quickly go up, tap this area, boom, sell off. But I mean, anything can happen still closer to that time, right? No problems. But that's all the confluences you can stack up. Remember, higher time frame confluence don't always necessarily need to be used for when price taps them and then look for a buy, right? Or when price taps this, yeah, like we did here, and then look for a buy. Or when price close below this, taps it, and then look for a sell. That you can do that. That's method number one. Method number two is if the lower time frame, like the 15-minute, is in the buy direction, like it is now, and you think, where would price most likely love to react from and use as liquidity for a move later on? This area. This area, 50% fib retracement. This is now premium. So bigger companies love selling from premium, right? and daily confluences. Absolutely beautiful liquidity levels. And that was my motivation for this TP, putting my TP there, right? We already reached 1 to 2. That's why I had to close, because price can still do what it wants, right? And we're very close to news. News is in the next hour and 15 minutes. So at the end of the day, price can still start reversing here. I mean, the market can do what it wants, right? So I think this was a very valuable session for me, as well it is for whoever's watching this, because this just shows me that you should not be greedy, right? So you literally take it one trade at a time. Yes, we hit stop loss here, and then I thought to myself, listen. This is still a very valuable confluence. We are still reacting from this 15-minute fee value gap. So just look for another entry. And then I told myself, if I hit stop loss now, I'm done for the day. I'm not going to even trade during New York, because then I've already risked the maximum amount that I wanted to risk for the day, right? So at the end of the day, I thought to myself, all right, that is the only conclusion that I came to, so that if I wanted to buy now, then I will use my New York setup risk for this trade, which I did now, and it went out beautifully to my to my knowledge. It went out good, right? So it is what it is. It's you have to take these risks. If you don't take these risks, you're going to wait for the next and wait for the next, right? So this was still a beautiful confluence, and it wasn't against, it was with my strategy, not against my strategy. So if I lost a second time, that I use $500 per day to risk, right? This was a 250 risk, and this was a 250 risk. So 250 loss, 500 win. So what am I doing now? Where am I now? I am 250 in profit right now. So what are we going to do, New York? What are we going to do? We're going to risk only 250. Why are we going to do that? Because we are up 250 for the day. So it is 100% okay to risk only what you can afford to risk. It's completely up to you to decide how you want to deal with your money management. So yeah, I'm going to stop now. I'm going to stop now because I'm giving so much information, but sometimes it's a little bit too much at the same time in one video. But yeah, I just hope you guys enjoyed it. Like I said, New York. So what am I waiting for, New York? Waiting for price to go up a little bit more. Make some form of a reaction here. This is a magnificent area. Magnificent area for liquidity for bigger institutions. Like you see, sell-off, retracement. Sell-off, retracement. You see? See what I mean? Bigger institutions love, if they want to sell, they want to sell from premium, which is the top half of the FIB tool, 50% to 100%. And if they want to buy, they love to buy from the lower half of the FIB tool. Yeah, in any case, I'm going to stop myself. I'm done. Thank you so much for watching, and hope you enjoyed this one. Cheers.